much for tuning into this earnings conversation with Mahindra Life. Arvind Subramanian joins in right now to talk about how he thought the quarter went by and what is in store for the second half. Arvind, good having you. Thanks for joining in. Hope all is well.
My pleasure. Always a pleasure talking to you, Neeraj.
Thank you so much. Arvind, how would you categorize the quarter? Because you could argue that bookings look strong and dwell a bit upon it. But at the same way, one can also argue that the residential, the completion, and therefore maybe on the back of that, the revenue growth numbers as reported or the profit numbers as reported were not the strongest. How would you look at the quarter?
You're absolutely right, Neeraj. So from an operational perspective, it's been a very solid quarter, building on a great start we had to the year. So if I put Q1 and Q2 together, we've crossed 1,000 crores of sales on the residential side, about 186 crores of leasing on the industrial side. Both of these numbers are extremely encouraging because they need to be seen in the context of the previous year. In the full financial year, we had done just over 1,000 crores of sales last year. So doing that just in the first half this year sets us up very well for the growth aspirations that we have. But equally, like you said, completions have been few and far between in the second quarter, and that is reflecting in the P&L, where both revenue as well as profit is muted because there have been very few completions. That should hopefully start getting addressed towards Q3 and Q4 as we have some completions lined up.
Okay, so we know from the conversation that we did the last quarter that the annual numbers are expected to look very strong. You've guided to fairly strong performance as well going ahead. Tell us I ask this to every company simply because the commodity price pressures were very evident in quarter one. For most companies, they have been choppy and volatile in quarter two and continue to remain so. How has that scene been for you? Were you able to take, or did you need to take some price hikes in order to mitigate some of those cost pressures? Have you done that, and how effective have these been?
I think, Neeraj, the good news is in quarter two, we are starting to see commodity prices stabilizing. They're at an elevated level compared to, let's say, 2 years back. But at least they're not racing away like they were over the previous preceding 3 or 4 quarters. So we are able to plan better. You may not be happy with the high commodity costs, but at least if they are within the range, then you can plan your projects, you can plan pricing, etc. We have been able to take reasonable price hikes. We have a discipline, as we had discussed the last time, of doing about 1.5% to 2% price hikes across our portfolio every quarter. We think this is a good discipline to maintain, and it gives confidence to customers who book early with you, seeing that the value of their purchase is appreciating. But over and above that, in well-performing projects, we've gone as high as a 6 to 8% price hike in the second quarter. There were some fantastic launches we did in the first quarter in Bengaluru, Mahindra Eden, which was India's first net zero energy project, as well as our last tower in Luminaire in Gurgaon. And both of these had very good response to the launch, and we've been able to take price up quite smartly.
Okay, so you're saying that you continue with this policy even if the cost pressures kind of don't escalate from the current level, because it's a policy that you put into place.
Yes, and as I said, it's more to do with why would customers buy early with you if they don't see a price appreciation? Then there's no logic for a customer to buy early and wait for 4 years if the price is going to stay the same. They do want to see some moderate price escalation during that period.
Yeah, I mean, I would have thought that in a lot of cases, people buy under construction property from reputed developers like yourself also because the payment gets staggered out and because for the last few years, we haven't seen too much of price rise, right? I mean, my real estate portfolio of my family is kind of remained stagnant in value. It just hasn't appreciated.
Yes, that's the saga of what you read versus what you experience is always quite different.
I guess so.
But you're right. There are many reasons why customers buy early. As I said, one of the reasons, as you rightly pointed out, is the fact that you can pay over a period of time. When you buy early, you get a better choice of inventory. You can choose floor, which orientation of apartment you have. If you buy later, there's fewer choices. But equally, I do believe that customers want to see some value appreciation, and they're not looking for, the days of the 15-20% per annum appreciation are long gone, but they do want to see some moderate value creation.
Yeah, that's true. Okay, Arvind, tell us how do you foresee one, the nature of the upcoming launches and the demand. So, for example, I was reading the Knight Frank report on residential sales in October in Mumbai. It seemed very strong, but month on month there was a bit of a moderation as well. And in the areas that I live in Mumbai, when I talked around, there is a fair degree of inventory coming up as well, all over Mumbai, maybe in other parts of the country as well. So would love to understand from you, because you operate in multiple parts. How is the demand versus supply pipeline? What is your launch plan going ahead? And how do you foresee demand to be?
As they say, a rising tide carries all boats. So the challenge of the real estate upswing having been hyped up so much over the last few quarters is that everybody is planning new launches, and there is going to be a reasonable amount of new supply coming in, which is not unexpected. But within that, there is a very clear trend. Customers are voting with their feet and saying, particularly under construction, I would prefer to buy with developers who have a track record of delivery, who I have surety that my money won't get stuck. And that is serving us particularly well. In the second half of the year, we have some very strong launches lined up. In fact, just this weekend, over Saturday and Sunday this week, we launched the second phase of Mahindra Eden, which, as I had mentioned, did very well. The first phase, which was launched in May, is sold out 90% already within 4 or 5 months. And that encouraged us to bring forward the second phase launch. This weekend, we saw fantastic sales just in 2 days for that second phase as well. And this is, mind you, at a significant price appreciation to the first phase. So that's giving us good, encouraging signs. The dark clouds on the horizon, of course, are interest rates. As mortgage rates go up, it does impact affordability. So far, we are not seeing a huge negative impact of that, but it's a watch out for us.
Well, I'm glad somebody's saying that, because most people that I talk to scoff at the idea of 100 basis points having such a large impact on such a high base. It may well be true. I'm not criticizing anybody. I haven't heard anybody say that, hey, it is something that is a point to watch out for. I'm glad you're saying that. I mean, what about business development or land acquisition, as the case may be? Because as I read all the notes which I've written on your results, everybody's pointing out to the fact that the one thing that you haven't done since maybe April or thereabouts is taken some new land, made some new land acquisitions. Now, why is that? Is it a tactical reason? Is it a cash flow reason? What is it?
No, it's not a lack of intent or action. There's a lot of activity on the business development or land acquisition front. We remain in active conversations on multiple opportunities. Unfortunately, I have learned the hard way that decision cycles from landowners and societies don't follow the quarterly earnings cadence. So while we may think we are very close to finalizing a deal, it does slip by several weeks because decision factors are very different. And particularly, we're now quite active in the society redevelopment space, where you would appreciate there are 200 or 300 members who need to come together to decide. There are many reasons not to decide and few reasons to decide. And that's why it takes a bit of time. But we are very hopeful that by the end of this year, we will certainly have a good shoring up of our land inventory.
By end of this calendar, you mean?
End of this fiscal.
End of this fiscal. Okay, fine. The next couple of quarters. Okay.
Yes.
A couple of things that you've announced. I think there's a JV with Actis. Maybe you can talk a bit about that, and also lean on a little bit on how would the leasing activity you reckon happen in the second half?
So the industrial business has really been on a very strong upward momentum over the last 3 or 4 quarters. Last year, we did just under 300 crores of leasing. This year, as I mentioned, in the first half itself, we've done just under 200 crores. We are seeing very strong take-up on the back of favorable government policies like Atmanirbhar Bharat, the production-linked incentive schemes. And this is coming from both multinational companies as well as Indian companies that are looking to expand manufacturing capacity. So Mahindra World City Jaipur in particular has been a bright spot in our portfolio. We have cultivated some strong pipeline of business in Chennai as well. So we are expecting that to come to the party in the second half of this year. The JV with Actis sits very nicely as an adjacency to this business. So the historical or embedded business we have is an industrial parks business where largely it's about leasing land and the client comes in and builds their factory or facility. The venture with Actis is intended to be able to build facilities for clients, because we are seeing a marked preference from some clients who are saying, I don't want to get into all this real estate stuff. I want to focus on my manufacturing operations. So why don't you build the facility for me, and I'm happy to pay you an annual lease, get into a long-term contract with you. And that's an exciting space. There's particularly on the logistics side, demand being buoyed by just the rising consumer demand. FMCG companies, e-commerce companies that are doing extremely well are investing in grade A warehouses to set up their distribution the right way. And we think we have all the capabilities required to serve that segment.
One last question before we wrap up. I mean, I'm guessing there's no change to the targets, right? Per se, what you laid out. I think there's no revision out there per se. One quarter.
No, not at all. So we are on course, as I had mentioned, 2,500 crores of residential sales, 500 crores of industrial leasing by 2025-26. That we remain on course to that.
Perfect. Yeah. No, I meant internal targets for the year 2025-26. But internal targets for the year, internally you stay on course. You reckon no changes there?
Yes.
Okay. Just one industry question, if you will, Arvind, before we wrap up. Do you reckon the advent? There's a lot of people or companies which are now starting to announce the micro version of the REITs, which is the fractional real estate model. And I've seen 4 or 5 announcements from companies which have got experienced people backing it, trying to do it. Any thoughts here? Because I mean, it's a play for retail which hitherto has not been there at all. Any thoughts on it at all?
It's been there in a kind of unorganized way in the past, where small commercial buildings would get fractionally sold after it was pre-leased to a set of HNI investors. I think what's now happening is that is becoming a much more broad-based retail play, starting with the large REITs. But now, to do a REIT listing, you need a certain volume, a certain aggregation of assets. That floor is starting to get dropped with some of the initiatives that you mentioned, where smaller assets are starting to get fractionally sold. It's a very exciting space, and particularly with the advent of new technologies like blockchain, I think there will be more of this, not just on the commercial office side, but also on the residential and other asset classes. So it's a space we're actively watching, would like to participate in it, once there is a certain stability and maturity to it.
Okay. Well, thanks so much for that, and all the best for a second half, which will see great execution, great business development, and hopefully stability of the raw material cost, because that's great for India at large. But thanks for talking to us today.
Fingers crossed. Thank you so much. Pleasure speaking to you.
Yeah, likewise. And viewers, thanks for tuning into this conversation.